I want to start with a sort of overlay that makes this Jackson Hole different. It feels like there is the question of central bank independence that no one really wants to talk about, but is something that's very much at the forefront of your mind. How important was that question in your decision to make the trek out to Jackson Hole?
I think, as always, the Jackson Hole conference is a very important conference for central bankers, but maybe this year even more important. And when it comes to central bank independence, this is the DNA of good monetary policy. This is the conditio sine qua non to do what we have to do to fulfill our mandate to achieve price stability. And so central bank independence, we have to fight for it.
Do you have any fear that that has already been compromised in some capacity in the Federal Reserve, which people used to call the central bank to the world?
Let me put it like this. I don't want to comment on US politics. I hear one or the other comments I really do not like. But just to point out, to give you maybe a kind of a reminder when it comes to the history of my country, Germany, going back to 1948, and we are grateful to the United States that you gave us an independent central bank. This was the starting point for the famous German Wirtschaftswunder. So central bank independence is key to achieve price stability, to build the basis for economic growth. So we have to take this into account.
This is critically important, and to me, this Jackson Hole is far more international than any other Jackson Hole I've been at. Bill Rhodes' great phrase, central banker to the world. Jerome Powell has to speak today to the developed nation central banks and also fragile EM central banks as well. What's the message you need to hear from Chairman Powell that reaffirms independence at a central bank?
Jay Powell gave many important, relevant speeches here in Jackson Hole. And this year, I guess, for him, it's a very important meeting. It's his last meeting in this role, giving such a speech. And what I expect from him, he is an outstanding, excellent central banker. And what I expect from him to deliver a clear message on price stability, the mandate of central banking, and this is price stability. And so he gives us this certainty we need in a very complicated world.
Given the fact that you could see some sort of mild recession in Germany, are you open to cutting interest rates further? After getting to 2%, which is sort of balanced, is it appropriate to become a little bit more accommodative?
Maybe a mild recession for this year, yes, this is true, but maybe we have also to think about that next year economic growth, there's a high probability that economic growth is coming back. When it comes to interest rate policy, I believe that we are in a kind of equilibrium. We have a 2%. We are on our target. This is good news. Interest rates are at 2%. So this is an equilibrium. So I do not see so many arguments that brings me to the point that we should do that we should do more here. So it's something. So I believe that inflation is not the point anymore.
Inflation is not the point anymore, that now it's potentially growth.
We are on our target.
But this is the issue. If inflation is not the issue, at what point do you see risk of disinflation, given the fact that the euro has been strengthening, right? That's importing disinflation. You have the potential for Chinese goods to be coming into the European region, cheap Chinese cars, that's sort of the cliche, that could lower prices. At what point are you going to be fighting disinflation again?
Well, it's definitely not time for complacency. So taking, for example, service inflation is still very high. It's above 3%. So we have to have this wait-and-see attitude. So this meeting-to-meeting approach is, I guess, the best way to do monetary policy in the euro system. When it comes to our September meeting, we will get new data, new projections, and then we will see. But at the moment, if I take all the numbers that I know, PMI numbers, I think not giving me enough arguments to change the path.
How high is the bar to cut
I think the bar is high. And so it needs a lot to convince me to change monetary policy.